The AGL Demerger. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee because we're going to talk about the AGL Demerger, which isn't surprising to anyone who's been following it, but is concerning and of interest to those of us who've invested in one of the oldest companies here in Australia. So let's start by having a look at the current AGL price. And I should let you know, I'm a shareholder in AGL. I bought in about $11.20. And I bought in yesterday, a couple of days ago before this all happened, this announcement, in my super fund. So I've now gone to a super fund where I can buy shares. So brilliant move there by Florian. Oh, well, it's part of it. Now I'm thinking, should I jump out? Or should I just hold it for the long run? It's not a significant, every bit of money is a significant portion of my investments, but I don't know if I can be bothered handling all the, I don't need a capital gains loss. That's what I'm saying. Because right now I'm investing for long-term and dividend returns. It's one of the reasons why I wanted AGL. Because it's a power company in many ways. And, had a nice fat dividend. And people are always going to need power. Always going to need power. And even if we have all this great push to renewables, well, let's have a look at this. Let's just start off by looking at our energy market here. Here we go. I'll bring this up. And we can see this is where energy is being produced. As of this moment here in Australia, if we look at Victoria, you can see all those wind turbines under 10%, 7%, 5%. That one, there we go. We got a wind farm at 23%. Fantastic. At 2%. You've got a power plant at 96%, and here we go, the coal ones at 116 and 90%. So there's always going to be demand for reliable power. Always will be. And we'll have to see. Here we go in Queensland, the same thing. I know there's a big push to batteries, but what's the lifespan of those? You've got to remember. So, with that in mind, that's kind of my reasoning behind it. But look at that trend, everyone. Look, you'd hate to have gotten in at this point. Look at that trend. And now their dividend, it's not being paid. They're going to hold their dividend payments to use it to keep money so they can move forward with this demerger, everyone. So let's have a look. So this article explains the demerger. AGL Energy to become Accel Energy and demerged AGL Australia into separate ASX-listed company. AGL Energy Limited plans to change its name to Accel Energy Limited, which will be Accel, and demerge AGL Australia Limited as a separate listed entity via capital reduction. Current AGL shareholders will receive one share in Accel and receive one share in AGL Australia for every share they own on the applicable record date. So once we find out what the date is, those of us that still hold shares will get one of each company. But, how low is AGL going to go before that date hits? Is it going to be smarter to pull out and jump back right in before that date? You tell me, everyone. And I've asked you, and we've got a poll to see what everyone's opinions are. So shareholders will have the opportunity to vote on the demerger. That's an interesting one. How would you vote on it, everyone? Are you a fan of it? To separate the companies? Maybe it's gotten a bit big. Maybe they've got management issues. Maybe this is a smart strategy. But the market doesn't seem to have seen it as a smart strategy, at least with the $8, 10% hit in shares from when the news came out. Accel Energy to hold a 15 to 20% shareholding, well, there you go, in AGL Australia, to enable it to share in value creation with no associated board positions. So they want to have their cake and eat it too. They still want to have a slice of that AGL money-making machine, which makes sense. AGL has received strong endorsement from independent capital structures from its lenders and for both entities. These capital structures are anticipated to be investment grade. Anticipated completion of the demerger is in the fourth quarter of financial year 22, subject to final board, regulatory, and shareholder approvals. So that's a fair bit of time to have capital sitting in this business not earning you any dividends, from my perspective, which is the whole reason why I invested this company in an infrastructure company. So I completely missed the ball on this one. This is why I don't give, you see all the YouTubers who give advice on what to invest in, or even tell people what crypto to invest in, and so sell all these memberships and things. And now there's talk of actually financial regulation and potential fines for influencers. I mean, this is why you don't listen to anyone online, guys, because there you go. Although I should pull up I had another one where I made like over 100% profit on an investment, completely through blind luck. Another infrastructure company that I bought in, this is a mobile company over in Canada and the US, that I thought, well, there's always going to be demand for that. And boom, the merger announcement. There you go. Fantastic. Shares nearly doubled in price. Yeah, I'm a genius. That's it. It's like the boomer buying a house in the middle of nowhere, or just out of luck and waiting 20 years and thinking they're a genius guy. It's what happened to being humble. Oh, it doesn't work these days. So let's have a look at this update from Reuters. So, Australia's AGL Energy said on Wednesday it expects to split into a bulk power generator and carbon-neutral energy retailer by June 2022. Now, this is the one I'm interested in, the bulk power generator. The carbon-neutral energy retailer, I can see, well, depending on government, here's the thing with carbon-neutral anything. I've become so skeptical of it, and I'll have a look here. I'm going to bring up the carbon market, guys, and we'll just draw this to some people's attention, because some people may not have seen this. How you become carbon neutral. What you do is you invest in carbon credits in different projects. And a lot of these projects are burning. Back burning, savanna burning. Someone replacing light bulbs. Here you go, more burning. More savanna burning. What else? Savanna burning, everyone. Here we go, savanna burning. Is this what you think? When you're buying your carbon neutral plane tickets, or I honestly thought of the idea of, developing an app where you can get, microcarbon credits for day-to-day purchases. I mean, that could be an interesting project to develop, but you'd really have to go down the green path and really sucker them in. But I mean, there you go. This investing, buying credits from this. I mean, good on them. Good on the communities and the people that do this. This is just fire management. This is mitigation. Maybe we should be getting carbon credits for clearing backburning in bushfire-prone areas. Why isn't that managed? Why, if that reduces the potential fire load in other parts of the year, that's a carbon credit, even though you're technically releasing carbon dioxide into the atmosphere. But anyway, that's why I'm a little skeptical about all of this, everyone. Here's the thing, you need to take one step further out to look at the bigger picture. That's one of the advantages of training as an architect. At university, you pin up your work and you get critiqued. You have a panel of people sitting there, guests, your lecturer, your tutor, and they will tear your work apart. And as one of the persons who's done that, as a critique, you can always just take one step further out, and a bigger scale. And then you can always find flaws in a project. That's not a bad thing. It's opportunities to improve for next time. It's just something you want to highlight. And a student will understand that. Usually you're a bit tired and exhausted, and sometimes you don't care anymore. I remember I got some feedback, and I said, yeah, I appreciate that feedback, but I'm going camping tomorrow. I'm not going to do any work after this. I'll just take the grade you give me. I'm too tired. So that's why, when I see this carbon neutral energy retailer, I think, okay, that sounds good, but where are they getting the credits from? Are they getting it from savanna back burning? Or at least then they're supporting, hopefully, regional communities, not contractors brought in. Anyway, so they would stop paying special dividends to shore up the two companies' balance sheets. Okay, does that mean we'll get no dividends or no special dividends? Investors gave a thumbs down on the plan, sending AGL shares 10% lower by the end of the day, following an initial drop of 4% after the company announced the dividend cut and warned it's still expected a material step down in earnings next year. Historically, hang on, we're not looking at yes, we are. Historically, demergers have been good for creating value, but I'm not sure this one's going to pan out for AGL, said Andy Foster, a portfolio manager with Argo Investment, AGL's 11th biggest shareholder. We don't want to hear these signs from their biggest shareholders, or their 11th biggest shareholders. AGL, the country's top power producer, said it would rebrand as Accel Energy Limited and hold the company's coal-fired plants and wind farm contracts, and would spin off AGL Australia Limited, the country's biggest retailer of electricity and gas, into a separate listed entity. So Accel will they'll be the bulk power generator, and AGL will be the retailer. That's kind of a shame. You'd think AGL, the brand, should stay with the power generation. Isn't that what they did back in the day? Really back in the day, everyone? The clarity of purpose created by this change will protect shareholder value, ensuring each business is focused on their respective strategic opportunities and challenges presented by the accelerating energy transition, AGL Energy Chairman Peter Botten said. Wouldn't it be good if we had AGL sitting? We've got a new nuclear division pushing for advanced nuclear energy production, completely carbon neutral. Accel will retain a stake of between 15 and 20% in the retail business, hoping to share in any gain in AGL's Australia's value. There are no restrictions on when it could sell that stake, executives said. AGL, Australia's biggest polluter, come on, first announced plans to split the 180-year-old company in March, after its share price more than halved over the previous 2 years, due to sliding wholesale power prices, pressure from the government to cut retail prices, and waning investor appetite for coal power. AGL said interim chief executive Graham Hunt would stay on as CEO of Accel, while chief customer officer Christine Corbett would head AGL Australia. Investors had feared AGL would have to raise at least $500 million in new equity to shore up the balance sheets of the two companies to secure investment-grade credit ratings. Instead, AGL said it would stop paying a special dividend through June 2022 and would underwrite its dividend reinvestment plan, which together would give it the capacity to preserve up to $500 million in cash ahead of the demerger. Hunt said the company was confident of achieving investment-grade credit ratings for both new businesses. Accel is counting on turning its coal power plant sites into clean energy hubs as it retires those plants over the next few decades and expects to be able to attract other investors as partners. We think there'll be lots of others that are interested in this opportunity, Hunt told Reuters. The frustration with all of this is the move away from coal is going to have absolutely no impact at all on climate change. This is a quote from Dr. Alan Finkel, Order of Australia winner, and our chief scientist. If the world were to reduce its carbon emissions by 1.3%, what impact would that have on climate change of the world? And his response was the impact would be virtually nothing. The reason he was asked about 1.3% was because that was our emissions, all of the emissions for all of Australia. So let's jump back here. And, well, let's look at the market sentiment. Now, this is from SelfWealth. SelfWealth, yes, the exchange or the trader I use, the broker I use. I use SelfWealth, and I plug them in my videos because they're cheap and they're CHESS sponsored. And the reason you want CHESS sponsored is then these shares are actually with your name, everyone. So look into it if you're concerned about the different ways of actually holding shares. So my IG trading account, which I use to buy my US shares, they're the third party that there's a risk associated with them that I'm happy to accept so I can get access to that market. But it's something you've got to be aware of. That's kind of why I want a CHESS for Australia, even though it's a bit more of a pain doing all the paperwork and all of these things, but still. So, on the community sentiment, 68% are bullish and 32% are bearish. And probably this will probably change in the next few days. We'll have to see. I previously voted bullish on it when I bought my shares. There you go. And here we have, it's 20th by rank by ownership, 54th ranked by weight, and 92nd ranked by company market cap. Now, 70% are buying and 30% are selling. Now, the reason they're buying is a good dividend-paying stock. Stock is undervalued, diversifying into this sector. So not happy with the company outlook is the main reason people are selling. Maybe the demerger, a divestment idea or opportunity. So you can see here where they're buying and selling. And this is part of their whole shtick is with SelfWealth, to pay for the premium membership so you get access to. I think you can see other people's portfolios and copy them and that type of stuff. I mean, let me know if maybe I should have done that, eh? But, I mean, my strategy at the moment is just passive income. I want to get a range and quite a spread of dividend stocks. That's it. With my pocket money investing in the US and buying different things here in Australia, we'll see. I don't know what I'm going to do. Maybe I should sell, or I'm thinking I'm going to be too lazy. So I asked you, the viewers. Last night I put up this poll. Thoughts on AGL, buy, sell, hold, and why? So 16% are buying, 34% are selling, 15% are holding, and 35% said not sure and are waiting. So we'll bring this up and we'll have a look at some of the comments that you have all left for this. And it's still 16, 34, 15. And we'll do newest first. Okay, Middle Cove Motors. Can I zoom in a bit here so it's a bit bigger? There we go. Okay. So, wouldn't a company like to be heavily dependent on the current political wind? I have no energy stocks. People always need energy until personal solar batteries become viable in the not-too-distant future. Not enough people investing in self-sealing stem poles. Well, here's the thing. You're always going to need backup base load. I guess until you can probably plug a little Jenny in. I've got my generator when I was quite concerned with potential power loss, but still, we'll have to see. We had a blackout here in Queensland recently because of the fire that was at the power station. Remember, we were looking at video, articles and concerns from, that Victoria would have potential brownouts just because the energy capacity wouldn't be sufficient in the summer. Remember when that was the big news? So, Daniel Deus, current shareholder of AGL. It's had some issues the last year to management shutting down several stations. The new company, AGL Australia and Accel Energy, will be a good idea for AGL as AGL reduces its plants and transitions to greener options. Accel will take over the dying plants and transition into battery hubs, leaving AGL with focus on customers through several areas: gas, electricity, phone, internet. If you don't own AGL already, then don't buy, as this transaction will be hard to predict margins and costs and how it will actually come through on earnings. For long-term play, 10 plus years, holding period, I think it's safe, as long as you buy with margin of safety as dividends are not guaranteed. In the end, AGL and Origin and Oz Energy are the three players here, and we need energy to run the economy, so AGL will always be in demand. The big question is, how many people and businesses are going to have solar on their homes' offices in the next few years? This will really hurt earnings. I'm in it now and regret the buy, but only because of all the uncertainty and government policies, etc. This industry is going to have to go through for a big transition. And the thing is, with all the solar on homes and offices and batteries, what's the lifespan on that? We're just going to be starting to churn through all of this. Solar on businesses makes much more sense than solar on homes. I never understood. Well, no, I knew exactly why they're throwing it on homes. It's for political gains. It's just for political brownie points. You see lefties are critical of politicians like, pushing money in certain areas for their electorates and these things. Critical of the Liberals, look at what they're doing. It's no different than all of them throwing money at bloody solar panels and then giving it directly to people. I remember sitting around an event with a bunch of people at a lunch in the city, and so many of them were talking about the panels they were getting, and none of them needed the government subsidies. So, MD, previously a strong buy, but poor management and infrastructure issues have really reduced their prospects. Energy prices will come into public discussion heavily if inflation goes on, and I think further regulations will be on the table. Further funding for coal gas projects are possible, but with unrealistic expectations of carbon transition, I think the funding will be inadequate to do large-scale projects to the scale of anything west of the mountains. Muzzle flash. The elites have decreed everyone with anything in the stock market will lose the lot. Then they will swoop in like vultures and buy up everything dirt cheap. It shall be so. We'll have to see. I hope not. I hope not. DIY Miracle. expect them to get bailed out. To be honest, Liberals is the party of too big to fail. I don't know why. No, they're not. They're the party privatisation. Well, they're both the parties of this. Nico thinks it's risky and probably safer to short it. Well, there's an interesting one. Who's shorting on the ASX? Let us know what apps you use in the comments, everyone. Probably could do C4Ds going down, but... Darko. The demerger news was expected at some point. Reduces management risk between both businesses and improves focus on the core components of both the retail and generation side. But if you're holding for 10 plus years. However, there is execution risk and also higher interest rates in the medium term if inflation continues. It will smash stocks like these if that happens. I guess best option is the opposite of the poll, as retail investors have a higher probability of losing money in the market. So what's the opposite of the poll? So buying and holding. Stop dicking around with individual stocks, buy VTS. And someone asked, looks good, what's the dividend? The dividend's 1%. Now, if I wanted dividend-paying stocks in the ASX, I'd probably go Vanguard, Australian Shares, High Yield, ETF at 3.4. Something a little risky, BIP. Yeah, I mean, this is the thing. Do both, mate. Do both. Invest in some EDFs and invest in some individual stocks. It depends on how much time you want to put into it. I'm interested in I want to learn about stock picking. You know, that's what I'm interested in at the moment. I see it as a hobby. You know, so each to their own. If you just want to have passive and put in for 3%, go ahead. I bought some of those as well. One that pays a monthly dividend here in Australia, and some US ones. You want to mix it up. You know, diversity is strength, everyone, in investing. There we go. See, we've finally found what diversity and strength is actually what it means. Lewis Cypher hold. Share prices will normalize after the transition period. Buying requires better insight into understanding how long prices will fluctuate, which I don't have. Selling now is just throwing money away. If you were going to sell, you should have done it last year when the price started dropping. Well, yeah. There you go, he's laughing. I mean, this is the thing. And incompetent management. This is the thing. If you need to... Why are you selling if you need to sell? If you need to sell, do you want to write off the loss? Do you have a capital gains loss that you need to offset from a capital gains? Then maybe. If not, it's up to you. So, that's the viewer poll. What do you all think, everyone? Buy, sell, hold, or wait? We'll have to see. You know, remember, I'm just some bald architect talking on the YouTubes. So nothing I ever give is financial advice, and I would not suggest you take financial advice from people. The only things I encourage people to do are pay off your debt. You know, pay off your debt and reduce your expenses and live a debt-free life, because that reduces the stress. The grey in my beard that I had was from having so many children and daughters. I swear. My stress levels are probably the lowest they've ever actually been, which is kind of funny. It shows you how little effect the lockdown is having on us because we work from home. But it is on play dates and stuff like that. Anyway, guys, thanks for watching. Like, share, subscribe to the channel. Let us know your thoughts and opinions on this one in the comments down below. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can sign up for SelfWealth or Stake. If you sign up for SelfWealth, we each get 5 free share trades. For Stake, if you fund your account, we each get 1 free American share. The advantage, or the shtick, the game of Stake, is you can buy a portion of a share. So this is a third party between you and the share. You don't actually own the share. You own the rights to it when they're So it's there's a risk associated with that. So you've got to understand that, everyone. And I'm happy to take that risk with them, but I'm not going to put a huge chunk of my money in these ones. But I mean, how else can I guess you could buy US shares through SelfWealth, but there's a cost associated with it. I'm a bit cheap at the moment. Amazon, eBay, Independent Reserve, or AussieBroadband. You can use our affiliate links in. Buy our merch. We make pocket squares. Use Gold Pass from the Perth Mint or good old PayPal. Have a great day, everyone, and good luck to all the fellow AGL investors. Take care.